Did you hear the news? Electronic Arts, or EA, one of the biggest gaming companies in the world, has just agreed to a massive deal to sell itself for $55 billion. This isn't just another buyout, it's being called the largest leveraged buyout in history. That means a huge chunk of the purchase is being paid for with borrowed money. The buyers are a powerful group: Saudi Arabia's public investment fund, private equity giant Silver Lake, and Affinity Partners, led by Jared Kushner. Together, they are about to reshape the future of one of gaming's oldest and most recognizable brands. EA is a household name. They're the creators of best-selling titles like EAFC, formerly FIFA, The Sims, Mass Effect, Battlefield, and Madden NFL. For over 40 years, EA has been a core part of gaming history. Their football titles alone have sold over 325 million copies since the first one came out back in 1993. The Sims has sold over 200 million copies, and Need for Speed has clocked more than 150 million copies worldwide. Very few companies in the industry can even come close to that track record. And that's what makes this deal so significant, not just for EA's investors, but for gamers everywhere. So what does this all mean for the company? First, EA will go private. All of its public shares will be bought out, and it will no longer be traded on the stock market. The purchase price values EA at $210 per share, which is a 25% premium over its market value. That's a huge markup and shows just how valuable the buyers think EA is. In terms of size, this deal is now the second largest gaming purchase in history, right behind Microsoft's $69 billion takeover of Activision Blizzard, the company behind Call of Duty, Overwatch, and Diablo. Now, many of you will remember that deal faced months of legal battles and pushback from regulators around the world. In the UK, watchdogs were worried Microsoft's control could harm competition in cloud gaming. In the end, Microsoft only got the green light after agreeing to hand over cloud streaming rights for Activision games to Ubisoft. For EA, things look a little different. Its CEO, Andrew Wilson, who will remain in charge, has welcomed the acquisition. He called it a powerful recognition of the company's work and said, "Together with our partners, we will create transformative experiences to inspire generations to come." But not everyone in the industry is celebrating. The buyers are putting up about $36 billion themselves, but the remaining money, almost $20 billion, is coming from loans. This leaves EA carrying a massive debt that has to be repaid, and that's where the concern comes in. Will EA's biggest franchises, like EA Sports FC, Madden, and the upcoming Battlefield 6, be forced to generate even higher revenues just to pay off that debt? Industry experts are worried this financial pressure could limit investment in new IPs and experimental projects, the kind of games that often push the industry forward. It could also lead to job cuts, something the gaming world has already been struggling with over the past year. At the same time, this deal marks a huge milestone for Saudi Arabia's growing influence in gaming. The country's public investment fund, or PF, has been aggressively buying its way into the industry. Just this past March, it purchased the gaming division of Niantic, the creators of Pokémon Go, for $3.5 billion. That division was then merged into Scopely, the studio behind Monopoly Go, which the PIF's subsidiary, Savvy Games Group, had already bought for $4.9 billion back in 2023. Saudi Arabia has also been pouring resources into the esports scene, hosting major international tournaments, including the Esports World Cup. Looking ahead, it's set to host the Olympic esports games in 2027. On top of all that, the nation's investment fund already holds stakes in Nintendo and Take-Two Interactive, the publisher of Grand Theft Auto and Red Dead Redemption. With EA now under its belt, Saudi Arabia's presence in the global gaming market is bigger than ever. But with that presence comes controversy. The public investment fund is backed by hundreds of billions in oil wealth and is controlled by Crown Prince Mohammed bin Salman. His government has faced multiple accusations of human rights abuses. A 2019 UN report concluded that the Saudi state was responsible for the killing of journalist Jamal Khashoggi, a critic of the government. Saudi Arabia has always denied these accusations, but they continue to cast a shadow over the country's investments. So this deal isn't just about gaming, it has wider political and economic implications, with Saudi Arabia using gaming as a powerful tool to expand its global influence. And now we're left with some big questions. Will EA's new owners allow the company to keep innovating, or will the weight of $20 billion in debt hold it back? Could this mean fewer new games, slower development, or even job cuts at one of the world's biggest studios? And how will Saudi Arabia's expanding control of the global gaming industry impact the future for players everywhere? We'd love to hear what you think. Let us know your thoughts in the comments below. And if you enjoyed this video, don't forget to like, share, and subscribe to the channel. That way, you won't miss any of our updates on the biggest stories shaping the world of gaming and technology. Thanks for watching.